unfortunately, it's usually kind of a contrarian positive sign when these outflows pick up the way that they have. What do you think are the reasons to be optimistic about this market?
So the reasons to be optimistic is that it really is in the administration's interest not to put the tariffs on December 15th. The market is already pricing in that those tariffs don't get put on. And the truth of the matter is that all the recession models will change dramatically if those tariffs get put on December 15th.
Or if they don't.
If they do. Because right now, the standard view is you have a slowing next year, but no recession. And that's pretty much the base case scenario for many, many research firms. The issue is that the consumer is holding this up. So December 15th are the consumer tariffs. And if you put a hit to the consumer, then you're going to really start changing the probabilities of recession, and you're walking into a recession probably in 2020.
Sure. So, Steve, I guess part of the point is we're waiting on that outcome. We've been waiting on these outcomes a lot this year. You know, every next deadline, people have to say, OK, well, if it does, then that's one thing. If it doesn't, that's another. Is that contributing to people pulling money out of the market?
I think it's contributing to short-term trading. I think there's fears that it will lead to a poorer economy. I don't know how cataclysmic it would be if these tariffs came in. And my view is, as long as interest rates stay at zero and central banks worldwide keep the pedal to the metal, which they currently are doing, I don't think the stock market will be in big jeopardy. I don't think asset pricing will be in big jeopardy across the board as long as we continue to have this sort of unified monetary policy. We'll have bear moves like we had in December, which are shallower than normal, are quicker than normal. I kind of view that as a bear market, and we're off to a new bull market here. Sure.
So just one point on that, though. When you're talking about unified monetary policy, are further rate cuts in the U.S. Predicated on the trade situation getting worse? Because if it's not going to get worse this year, then what happens?
Well, I think it's predicated on what's happening elsewhere in the world. I think the Fed's trying to catch up with what the ECB and the BOJ are doing. You know, we saw just last week the Fed announced that they're going to be buying bonds again in the middle of October. They're essentially starting whatever they want to call it. It's QE, and they're starting it again. In fact, in Europe, the ECB is running out of German bonds to buy. They made that announcement last week as well. So these policies continue, and they may not be new, but they add a tremendous wind to the market. They add a tremendous wind to the economy. And, yeah, trade policy will matter, and it will hurt. But I think what's really moved this bull market over the last many years and continues to move asset pricing is this sort of historic monetary policy worldwide.
The S&P 500 is less than 2% away from all-time highs, Alicia. So in terms of pricing things in, we haven't priced in a lot of bad outcomes, have we yet?
No, we haven't.
So what's the risk reward to this market?
So what we're pricing in is another 25 basis point cuts for this year, which we do think happens, even if there are better signs on trade, only because you really do have to have the U.S. central bank more in keeping with the other global banks. And the strong dollar has been an issue for U.S. corporates. And, you know, we're pricing in no inflation ever again. But if you look at core CPI has been over 2% for several months now. So the PCE, which is the Fed's preferred measure, is not and is low. But CPI is. And just hard to believe that we'll never see inflation ever again, that all those models are broken.
So you think just one more cut?
We think one more cut, because we do think it's actually in the interest for the administration to get moving on this. Wow. and actually postpone those December 15th tariffs. If not, it means that the administration is willing to risk a recession to get this right with China. That's a probability that's not zero. I mean, that could happen.
But it's just interesting it would happen in this timing with the election coming up so soon. I know what you're saying.
These are really tricky issues, right? So what the administration has learned is that tariffs work. And it's only the threatening of increasing tariffs that brings China to the table. So they cannot get rid of them right away, because that is the way to get China to the table. It also could be dangerous for Europe as well, because that is the message they've learned.
It's true.